Why AMC stock could be a ticking time bomb for short sellers at current levels. Guys, this is what we're going to get into here in this video. We're going to look at this article, look at the Ortex data, go over everything you need to know for this intraday update. So let's get straight into it. And like I just said, it says why AMC stock could be a ticking time bomb for short sellers at current levels. Although AMC is down sharply in 2022, the 500,000 shares worth of short interest in AMC stock, coupled with high borrow fees, could present serious risks to short sellers going forward. If we go ahead and look at the key points, the year 2022 has been a tough one for AMC Entertainment investors. All indications are that the stock will end the year down considerably. Thanks to a bear market driven by inflation, high interest rates, and recession fears, more speculative assets such as AMC have taken a beating. Investors have raised plenty of questions about the consistency of AMC's business fundamentals. However, high rates of short selling, elevated borrow fees, and socially mobilized support for the stock could end up biting those who insist on betting against AMC. AMC is a big target of short sellers. AMC Entertainment has had an awful 2022, down nearly 80% year to date. AMC shares now hover near the $5 level. Many investors seem to have embraced short selling strategies as a way to glean profits from a bear market. And naturally, short sellers tend to direct their trades towards supposedly more fragile stocks with sketched valuation multiples, balance sheets burdened with debt, and no concrete prospects of short-term profitability. AMC fits that bill exactly. Throughout 2022, AMC was one of the preferred stocks to short, and it turned out to be a great investment for short sellers. Indeed, according to S3 Partners research, through early December, short sellers had netted about $1.73 billion in mark-to-market profits betting against AMC. Borrow fees that are in the stratosphere. To establish their positions, short sellers first need to borrow shares of the asset they want to short. The predilection of short sellers for AMC can be seen by looking at AMC's borrow fees. Following the simple laws of supply and demand, as demand for an asset to short increases and as the available pool of borrowable shares decreases, short fees increase. As a rule of thumb, borrow fees tend to hover between 0.3% to 3%. Rates above 3% indicate a high demand for shorting and greater difficulty in borrowing an asset. Based on this, AMC can be certainly considered a hard-to-borrow stock. The latest data shows short sellers need to shell out 21% in annualized fees to bet against AMC. Among those stocks with a short interest above 50 million, AMC has one of the top 10 highest borrowing rates, and it goes into the short interest as well. Stocks with a high percentage of short free float are typically more susceptible to short squeezes. Currently, about 19% of AMC's float is held short. However, the short percentage of a float does not always directly indicate whether a stock is squeezable. What really makes the difference is the amount of money that is at stake. In this case, AMC's 19% short float equates to about $563.5 million worth of AMC shares. Just over $500 million shorted is a sizable amount. It should be enough to cause ample discomfort for short sellers who could get caught up in a squeeze should a catalyst cause a sudden upward movement in AMC's share price. And it also goes into something that I think is very important that does not get talked about all too often over here on YouTube, that one of the biggest aspects, if not the biggest aspect of a short squeeze, is popularity, of people knowing about the actual trade, right? It's very unlikely to get a short squeeze in a stock that you don't know about, that nobody knows about, right? When AMC has such a big following and, like this article says, social mobilizing investment support, that's an interesting way to put it. When AMC has this kind of attention and support, it makes it much more primed, or the percentage, the probability, I should say, of a short squeeze becomes a lot higher. And that is something that needs to be highlighted here in this video, that this is not some random Joe Schmo kind of stock. This is AMC. This is a stock that everyone knows about. So when it finally does start to rally, everyone is going to be talking about it. Even CNBC, you know, these investment websites, Bloomberg, CNBC, they're going to be talking about AMC yet again, and that could also help out the situation with the stock. So this article was from about 2 hours ago, guys, so there is a lot of attention still on AMC, and that will be a very positive thing, I think, in 2023. Now, AMC Theaters says it raised $162 million from APE shares using cash to pay down debt and fund acquisitions. This was also an article from 2 hours ago, or a little bit over 2 hours ago. It was posted at 7:09 a.m. And it does go to say, even though the APE units and our common shares are economically equivalent, it is disappointing that the APE units have since inception consistently traded at a significant discount to the AMC common shares, AMC CEO Adam Aron said in a statement. However, he added that while the trading price for the two securities seem to reflect distant market and trading dynamics, the APEs are serving precisely the purpose originally intended for them. To that end, the company is using the cash raised to pay down its debt and to fund some strategic acquisitions. The company says it has reduced its overall debt obligations by $180 million this year, reflecting both refinancing and the purchase of existing debt at a discount, and it has acquired a former ArcLight location in Boston, Massachusetts. The company says it will end 2022 with between 725 and 825 million, though the exact number will depend on the performance of theaters through the end of the year, Avatar 2 being a critical piece of that, and including its revolving credit facility. The global box office is widely expected to improve next year, though it is not expected to return to pre-pandemic levels, as the flow of movies to theaters continues to be slower than before, and with the pandemic still wreaking havoc in various markets, not to mention more comfort with streaming by consumers. So when you add all of this together, put 2 plus 2 together, and you're looking at a pretty good 2023 in my personal opinion, guys. I think it's going to be pretty hard to see a worse 2023 than 2022, and I think we are on the right path. Even though there are blips in this road, I think we are on the right path nonetheless. Now, let's get into AMC and what is actually happening today. So, AMC down about 7.63%, trading at $4.90, and this is under the low of 2022, which was $5.05. That was set back here on November 9th. You are now under that. We did hit a low of $4.78. We have retraced to the upside a little bit, but still, it's a pretty bad day. The stock down about 8%. So from here, we just want to see how low do we go. Do we kind of find some support here, get a little bit of that triple bottom going on, and can see a move back to the upside? I think a lot of it will depend on the continuing Avatar numbers that will be coming out over the next days and over even the next couple of weeks. But also, not even that, just what happens with the economic data will also be super important, because especially on Friday, you do have a lot of economic data the markets will be grappling with. This time of the year, though, does tend to be seasonally bullish, so we will see how that plays into the markets and also into AMC stock. Now, let's look at the short interest and the cost to borrow rates, because they are all going up yet again today. It looks like about 350 million shares have been sold short of AMC here today. Now the free float is sitting at 19.03%, about 98.11 million shares that are sold short. There's about 0 shares available to be traded at the time of recording this video. 600 an hour ago, 0 2 hours ago, 100 looks like 3 hours ago, right? Not a lot of shares available. Cost to borrow rates, the live numbers from Interactive Brokers, sitting at about 22%. Cost to borrow average at 29%. Cost to borrow max at 38.06%. And cost to borrow minimum at 19.21%. So when you boil all of this down, you know, the cost to borrow rates are still not going down. The cost to borrow rates have plateaued, and they're starting to rise yet again. That will continuously help put pressure on these short sellers. Now, if we also take a look at the option activity for the day, last Friday, you did see 36 orders totaling $1.4 million, positive order value of 53%. Here today, you have seen 17 orders totaling $550,000, positive order value of 56%. And you are seeing a lot of interest again here today for the 2024 $8 calls with AMC, even some right here, the March 17th, 2023 $8 calls as well. You are seeing a lot of call activity, which is interesting on AMC because we are down 8% today. So I do think that is something we definitely want to watch at the very least, guys. If we take a look at the Stonko tracker data, the numbers are real bad here. For this Friday, 421 calls that are in the money, 130,000 calls that are out of the money. If we look at the put side, 34,000 puts are in the money and 11,308 puts that are out of the money. So there is a lot more calls on this option expiration. 75% of the open interest is calls, but you know that you're not seeing a lot of them in the money. The puts, you're seeing a lot more puts in the money than calls are in the money, like by a long shot, guys. So keep that in mind. All of this is very important. If we can get a rally throughout the rest of the week, I think that will be very key with AMC, and eventually we will get a relief rally. The question is, how big will that be? So there is all of that information. If you can't tell, I'm still a little bit under the weather, so kind of want to get through this information, give you guys what you need, and then let you guys get on your way. So that is going to be all for this video. Not too much else to actually say. If you can't tell, I'm still very bullish on the short squeeze on AMC. Let me know what you think down below in the comment section. And really, if you want to put it in simplest terms, if you're going long on AMC right now, you're doing it at the lowest risk throughout all of 2022, right? You're buying the stock at a 52-week low. Can it keep going down? Sure. Am I a financial advisor? Absolutely not. But typically, if you bought the stock at the 52-week low, you made a lot of money throughout 2022. I don't think that trend is going to change in the grand scope of things, guys. So that is it. Hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you for watching, and I will see you in the next one.